Something very interesting could happen to Build-A-Bear. So first, let's read this disclaimer carefully and do your good deed of the day by liking and subscribing. So we can find Build-A-Bear under the economic signals, and it's in the physical toy business. The average performance is substantially above the S&P 500. When we look at Build-A-Bear, it is the absolute king of them all. Super performer. I did an analysis of Build-A-Bear towards the late part of 2020, in which I was bullish on Build-A-Bear in this report. But it begs the question, what should be our thesis going forward for Build-A-Bear? Here is the company's website. They have this very interesting system in which you can create highly personalized teddy bears and other, plush animals. You got Baby Yoda here as an example. Yeah, a very interesting business, and it's been very popular. The thing is that when we look here at the giga picture for this stock, it's been through a lot. Huge rallies, substantial sell-offs. So throughout this entire history, 100% of history, we have never had this PPO, meaning distance from the red to 100-week moving average. Same thing with the RSI. The current RSI reading is without much precedence. So this pink arrow shows us what happened the last time we had this PPO. That was a super major peak, huge peak, and which resulted in an absolutely spectacular sell-off. When we look at this RSI here, that is similar to what we have now. You got a major correction. In this instance, you got a correction down to the purple 20-week moving average. In this instance, we go down to the blue 100-week moving average. So basically, the current reading represents ridiculous risk here for the bulls. Part of the reason why Build-A-Bear has been on a tear is that it's been part of this whole meme stock category. But unlike AMC and GameStop, the crowd behind the Build-A-Bear is not even remotely as built out. I did find some time cycles that have been rather consistent throughout here. So for many years, we have seen that these time cycles repeat themselves. Rise, decline, 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 rise, decline. So basically you can see quite clearly yourself that even though there's not like a perfect relationship with the time cycles and price, the relationship is far better than random. I mean, there is something going on here with the time cycles. So this current time cycle, we would expect already a declining phase to be in development. We haven't seen that yet. This decline extends towards the later part of June. It just so happens to be that looking across the last 18 years, the weakest month for Build-A-Bear is June. June is dramatically weaker, both in terms of how often it closes higher, and it also posts the biggest average loss, around 6%. So now we have a situation in which we have ridiculous RSI and the PPO readings. We have a time cycle that is towards the declining phase is expected, and the seasonality confirms the time cycle. But we, of course, need to explore further. So we go here to the daily data points. And, when we zoom way back, the PPO, which in this instance measures the distance between price and the 200-day moving average. Yeah, we have this is a ridiculous high reading. Looking here at the RSI, we recently had a record on RSI. When we look here at the wicks, so we did try to go higher the previous 3 days, but you see here that we closed lower. Obviously, the bulls are still in control, but the odds historically do not favor a continuation of the move. Here is Finviz. We are way above all kinds of trend channels. As far as analyst price targets, the problem is that these price targets are very, very old. Here is 2017, that is the freshest. Hence, we shouldn't really draw too much conclusions based on this price target. What is interesting to look at is the short float and the short ratio. And it is not, this is not like really big or anything. So you can't really make a case that that we have the conditions now for some kind of GameStop short squeeze. Far from it. When we look here at Saks.com, they do have a number to buy. They have a B value score, A growth, B momentum. I'm a bit puzzled by the value score though. Yeah. The industry rank, top 30%. Industry is retail miscellaneous. There's no dividend. The company is small-ish, $246 million here in market cap. Yeah, it's an interesting company for sure, and I was bullish on Build-A-Bear towards the late part of December. So I did the analysis. I turned bullish on the 13th of December. So let's look at what happened from the 13th of December. So from when I turned bullish to where it is now, it has increased 290%. The reason why I turned bullish at that point is that it was undervalued. It had like an A value score. From Saks, and you also had support at the 20-day moving average in purple. So I'm really puzzled here by the value score from Saks that is now at a B. Yeah, but as you saw, there's many other data points that we found that tell a substantially more bearish message at this level, because that's the key thing. Down here, if you look here at the chart here, when I did the bullish analysis, I also made the case that we had the rounding bottom. We were breaking out. The stars were really aligning for a bullish thesis. There was a nice risk-reward setup. But at this point, it makes a lot more sense to become more bearish. So it's time to build a bear for Build-A-Bear. To get access to all the research, you just go here and subscribe. So you get the top picks of the week, you get investing courses and seminars, and you get the entire Excel watch list. The performance of the research is substantially above the vast majority of researchers out there. And my long-term plans is to establish a hedge fund. So if you or people have plans of getting into the hedge fund industry or already are in the hedge fund industry, then feel free to contact. The absolute key thing I am looking for, I need someone who has a full CFA, certified financial accountant, because and also that is very familiar with the laws around how to operate a hedge fund and so on and so forth. Because I can do all the research part, but I do not want to go back to school and go through a full CFA, because I already have a Master of Science degree.